Hey guys, I thought I'd try a new format for the PDFs that we put out, and just kind of instead of going through an audio on it, I was just going to make a video and upload it to YouTube. These are issues that I do for those who have never seen these before. These are issues that me and Kashop put together. I love doing these with Kashop because it's kind of two very different viewpoints kind of coming together at the same time, where I'm more of a price action based macro style trader. Kashop's more of a fundamental trader at the same time. He's kind of coming in doing looking at the micro a lot more than I am. So kind of when we come together, you get two very different viewpoints. At the same time, we kind of look at things in a very similar way. Long run, we both have a kind of a, I guess, Austrian economics style background, but we're also very trader. We're both very trader oriented, meaning we're never going to come into things and say, hey, because of our economic theory, we know that this is going to happen 100%. We know that trading is a probabilities game any way you look at it. And we're also, we talk about mistakes here too. There's nobody who is a perfect trader. I always use, for those who haven't heard this analogy before from me, it's kind of a like basketball. If you're throwing a bunch of shots up, let's say you're Michael Jordan and you're in the NBA finals, is that Michael Jordan ever had a 100% hit rate on his shots? No, nobody ever will. And it's the same way with trading. You have to be willing to take those small losses before they become big losses, and look for those big winners to pay for those small losers. And this is how you become a very profitable trader. Also, never going all in on one position, understanding position sizing and risk management. All of this is very important. So this all kind of goes into what we put together here. Now, the first part of this is going to be my positions for both of the funds. So I have a fund that's more of a long-term based. This really comes into a more of a ETF based individual stocks and so on. And then the overall, like what I'm doing with my cash is kind of how I put that together. Do I have how much do I have in my futures account that I use for primarily for trading? How much do I have in my long-term or retirement style account? What do I have besides that? I also kind of put that into this as well. And then sometimes I'll put up systems. This time I haven't. There just seemed to be they were getting very redundant, so I didn't really put any of that in here. But we start out. There's a lot of quotes because I think it's very important to have some motivation between trading and investing. It's kind of a thing where it's not only I think so many people think there's some magic to trading. There's some magical way to become a very good trader. And I could sit here and tell you something that's going to make you a perfect trader, but it's an art form in the sense that everybody's going to have a different style. Everybody's technique is going to be different. And some people can't handle a very long-term style time frame like me. So they might trade on a very short-term in a short-term method, and that might work for them. Whereas I can't trade in such a short-term method. So that doesn't work for me quite as well as looking for the primary trends as well as the outlier trades. And so we're also looking for some motivation into understanding this and especially from the past. And so the first quote I use is from Jesse Livermore. And it is, human nature never changes, therefore the stock market never changes. Only the faces, the pockets, the suckers, and the manipulators, the wars, the disasters, and technologies change. The market itself never changes. How can it? Human nature never changes, and human nature runs the market. Not reason, not economics, and certainly not logic. It is our human emotions that drive the market as they do most other things on this planet. So once again, you'll notice the market over time. I could go back to 1920 and look at the market and see breakout patterns and flags, and we're holding over a moving average, we're under a moving average, we're making a new high, we're making a new low. This is changing trends, and I can see this over and over again. And I think the reason why this works and why it is that way is because of human nature. Like he says, human nature never changes. That's why these patterns keep coming up over and over again. And also while you see blow off tops, people get very excited and everybody's piling into something. And then you'll see panic bottoms where everybody's finally sold and they've panicked out of things. Next quote is, never let fear of striking out get in your way. And this is very important, because when you're trading, you have to really understand that you're going to lose at some point. And you have a signal. For example, a ball's coming to you. You're babe fucking Ruth. A ball's coming at you. You got the bat. It's coming at you. Looks like it's in your zone. Are you going to try to swing at it, or just would Babe Ruth be Babe Ruth if he doesn't try to swing at this? Yes, he's going to try to swing at it. If it's out, if it's something that's nowhere near something that he thinks he can hit, yeah, he's going to wait on it. But other than that, he's going to try to swing at the ball that makes the most sense to him at that time. And that's how you do it with trading. You try to take those signals that are going to hit your system. If your system is coming in and you have, the perfect thing to look at, you have a breakout, let's say you're running a breakout system, let's say you're running a mean reversion system, whatever you're using, you've back tested this, you figure that it works, you have to continue to take those swings. And you will miss at certain times, even though it might be the right trade historically. This is why we back test. We understand things are, nothing is 100% in a back test. Sometimes they say 60%, sometimes they say 50%. So I know that 50% of the time I'm going to be wrong. And I understand that coming right into those trades. And this makes me understand that, okay, so I keep my losers small. And let's say I lose 1% of my portfolio on those losers, and I look to make 5% of my portfolio on those winners. That means I can be wrong 5 times in a row and still make money. That's how you put together good trading. So looking at the model retirement long-term portfolio. So looking at that right now, obviously it's still, we're in a very similar spot, meaning we have energy, XLE, XOP being the ETFs. Yes, we can look inside of those. As I put in this every single time, portfolios are managed based on, so the retirement portfolios are in something called managed accounts. And in managed accounts, what we do in that, we come in and go, okay, well, each of these are separate individual accounts that I myself will manage for other people. And so as we're managing these accounts, I can either put them into a group of, this is more aggressive, now we're using individual stocks more, we're doing other things more, or I can put them into something where we're only using ETFs, or I can have something that's a major overview account, which is even lower volatility than that. But mainly this is a good overview of how we kind of put them all together, using just kind of the ETFs and so on. But regional banks, metals and mining being one of our best sectors. The weight is actually a bit up on that now because it's been performing very well. Regional banks, they're holding up, not doing anything crazy, but just holding up. Mexico's been a great trade. Even in this environment, the portfolio has done very well. And as you'll see, we're in areas that are showing great relative strength as we're moving through it. Vietnam, that's another flat one, but that's been doing very well, hasn't given a sell signal yet. Wood, IYR, which is real estate, that one got sold off but came back in. That's been a good trade. It's kind of like, I don't really want to hold bonds in this environment at all, so I like the idea of holding REITs in the portfolio, something and gaining yield, something that's kind of relatively low volatility. Uranium miners, defense, gold miners are back in, silver and gold back in. Carry is listed twice. Sorry about that. Didn't realize that till right now. Bitcoin, you can use an ETF proxy. We try not to, especially now. A lot of the brokerages accounts have crypto in them, like Interactive Brokers just added crypto to their account. So you have many ways of doing that. So then we have TIPS, fixed income, and carry currencies, meaning maybe we have, instead of cash, having something that's kind of heavy, has a nice yield on it. TIPS, obviously the TIP is the ETF for that. Carry currencies, there's other way of taking currencies that make a yield, putting those in your portfolios from other countries to make some money on those. read about carry currencies if you choose to kind of dive into that a little bit more. And then, like I said earlier, the model weights. So this means my futures and options portfolio, that's 30% of my invested income. Long-term portfolio, that's another 30% of my invested income. Physical gold and silver stepped up a little bit heavier recently, and that's at 22% of mine. Now, I don't suggest everybody. For myself, that's what I am interested in. Other people might want something like 5, 10, whatever you're comfortable with. For me, it's something that I've been collecting over time. This is why I'm getting to these numbers. Stable coins yields, meaning looking into DeFi, looking into things like block fee and so on. You can put money away, earning an 8% to basically a 5 to 10% yield, depending on what you're looking through in a US dollar stable coin, and making money for you in the meantime. And then some cryptocurrencies. Now, I quite don't have 8% of my cash in there. It might be somewhere around there at the moment, but it's not, I don't think it's exactly 8%. I think I'm at 7 at the moment. But this is all ways. Now, once again, you'll see this flip back and forth as you look at these, because now I'm going, okay, well, stable coins, I want to start putting more money into stable coins, and then it'll come out of my crypto back into stable coins, and then vice versa, going the other way if I feel like I should be more invested in cryptocurrencies at that time. Next up is the model futures portfolio. So the model futures portfolio, futures are a leverage product, basically using and they're not exactly like options in the same way that they don't have time decay. Yes, they do expire, but you can roll into the next contract. And once again, this is a more advanced thing. So if you don't, this is where we're looking for those really major returns. This is why, this is something for really advanced traders. Not everybody's going to be a futures trader, and that's totally fine. I don't suggest everybody trade futures, but I do think that it's something to really look into. And also, it's something that you need a lot of income to kind of put to that. You can't really start those accounts with something like $10,000. You want something around even 100K is kind of a safe place to start when you're trying to trade futures. And you'll see that a lot of these are very, very similar. Waiting for a new signal in Palladium, which actually came on Friday, I think last week. So that ended up hitting. Country indexes, meaning buying the indexes for that entire country of Mexico and Brazil, kind of like the S&P 500 for the US. They have those for other countries as well. Gold, silver, and and lots of commodities on the long side, obviously, still. And then the Brazilian real, which is the BRL, AUD, the Australian dollar, and the Mexican peso. Those are all on the long side as well. Short, meaning so the USD via commodity currencies, meaning I'm not actually short the US dollar, but I am long some of these commodity currencies like the Brazilian real, the Australian dollar, and the peso. Short the 5-year bond. I'm actually short the 2-year, the 30-year, and the 5-year at the moment. I'm also short the euro dollar futures, meaning GE for people who trade futures. And then that's the 3-month bond. And then the Japanese yen. Larry Haight, this was a quote that was actually in Trend Following, the book, which is the quote goes, there are 4 kinds of bets. There are good bets, bad bets, bets you win, and bets that you lose. And so what we try to do here as traders, we're trying to do these good bets all the time. Good bets, even good bets that you lose money. So there are good bets where you win money, make money, and good bets where you lose money. That is, are you following your system? Did you follow your plan? If you played basketball before, think about it like, okay, if I'm wide open for a shot and I'm in a space that's within my range, I can most likely make a basket pretty easily. So I will take that shot there. That's a good shot, whether I make it or I don't make it. If I have a wide open layup, that's a good shot. If I'm a good 3-point shooter and I'm wide open on a catch and shoot, that's a good shot. But it's a bad shot if I'm at half court hucking up logo threes and I can't do those that well. so in trading, it's the same thing. Is it something that you have a reason for it? And that reason could be fundamental, it could be technical, it could be whatever you want. You just have to figure out a way to make that systematic so you can do it again and again and again. If you're guessing and going with your gut and all of these things, that's not a system. That's not something you can do again. And the best thing I've ever learned was, if you make money and you don't know how you did it, you can't do it again. So it doesn't fucking matter at all. You're just going to lose it anyways. This is Kashop's part of it. So I'm kind of leave that for people who are actually subscribing, but, and also the people in the fund. But you really are going to want to check this out. I really like the way Kashop put this, talking about the idea between, I'm going to go past it so not everybody can read this whole thing. But basically what he's talking about is the idea between things getting overblown, which will happen. Too many people getting behind a trade. Even, there's been times where I've even said, like, I guess I am long the commodity trade, extremely long the commodity trade, but I don't feel good about it at the moment. And that's, sometimes you see sentiment getting to a very extreme point. Bitcoin was one of those. Bitcoin getting, that $60,000 zone. I'm not talking about at the moment. It's kind of, sentiment's kind of washing out, but I'm talking about when it was 65K, at one point, and that was, last year. It was beginning of last year. And at that point, everybody was behind it. Elon Musk is talking about it every day. It's on TV every day. Bitcoin, Bitcoin, Bitcoin. You got to buy it or you're stupid. And then finally, the whole thing kind of blows up. So this is at that point where you go, well, Bitcoin was a great trade. Even though I'm not just going to sell it here, I am going to realize that there's extreme sentiment here, so things can move the other direction. He also talks about the shipping trade in that. If you haven't checked out the video from Kashop, where he talks about the shipping trade, it's really important to check that out, because these are great ideas that now are kind of catching on. And the reason why I had him on was because we had been talking about that. I mean, he's talked to me about that so long ago. He was the guy who got me into that trade in the first place and started to look at that sector. So now that I'm seeing all these other people in it, I wanted to give him a chance to kind of put it down that he really was the guy to kind of come out, talk about it, find great picks in it, and has continued to adapt this trade over time. So definitely want to check that out. Now this is my chart storm. Basically, I put up a bunch of charts kind of going through what's what. And I wanted to also get into something real fast too. So going on Koyfin and my Koyfin account, basically looking at what's the style factors right now. And this is important because I think a lot of people aren't really, they don't really pay attention to sectors and style factors, and all these things are important. And even to me, style factors aren't the most important piece of it, but it's something I want to pay attention to. And this is weighted. This is not just the gain from the year. This is the gain against the S&P 500. So large cap value stocks have been the winner, and high dividend yield has also been the winner. So you'll notice that both of these are kind of in the same area. So if you look at energy, these are high dividend area, they're value area. You look at banks, they are both of these as well. So now we're seeing why things are kind of going to that area. Low volatility is also in there, which is also kind of interesting because that's something that you don't normally see. Low volatility and value usually doing well at the same time, but they are at the moment. So this is something to kind of keep an eye on. And then if we go to sectors, and I'm using this because I have one of these on here, but the sectors aren't updated. This is updated, and so we're going year to date. And we're noticing something very interesting here, and I wanted to clear something up because I keep seeing this on the internet, which is, hey, at late cycle environments, we usually see energy and utilities going up at the same time. That is utter bullshit, and I have no idea who the fuck decided to start saying that. And I've seen it posted a lot of places, and once again, it's kind of a thing. It's just debunking certain things, like consumer staples do very well in inflationary environments. That is not true either. There are things that can do well in the staple sector that can do well. For example, Walmart isn't something that would do well in an inflationary environment, but a actual food producer who has their own farms would do well in that type of environment. So saying that, that this is doing well because of blank isn't the right thing. What I see here is that, and this is why I also say we always have to pay attention to value as well. And yes, I make fun of that word a lot, but I also always say that I pay attention to it because I also want to see what sectors are completely overblown. And tech is absolutely overblown, has been overblown, continues to be overblown. And that's why we're seeing it at the bottom. I mean, it has moved so far away from reality and what the actual earnings are for these companies for so long that, it has to reset a bit. And as people flip going from tech into other sectors like energy, like we saw value, like we saw dividend stocks, like we saw these things, as we see these things flip, that's where we start to see, okay, well, now people are running into that. So once again, if we look at this completely objectively, we would be able to say, okay, well, tech was very, very overvalued. Energy was very undervalued. And this is where we get that flip from. But if we look under the surface, we're seeing that the deflationary sectors, the sectors that do well, usually when bonds do well, and bonds are fucking not doing well at all, are actually doing very good right now. Meaning, not saying good as in, hey, I want to own these things, good as in, hey, these things are up more than most of the sectors, meaning XLV, healthcare, XLP, consumer staples, XLU, utilities. So those are doing well in this environment, meaning people are getting very defensive, even though bonds are not. So once again, I always say, and most people say bonds are the truth, even though a lot of people say that. Most people, like Raul from Real Vision, always says that, but he always tends to change his mind or believe whatever he wants to believe about bonds. For example, bonds have been going down for a year and he keeps saying bonds are the truth, but then he's on the opposite side of the bond trade wanting them to go up. I don't understand where that comes from, but whatever. But that's what I'm getting at. So if bonds are the truth, then these sectors are still not areas where we exactly want to be in. But for me, I think I want to get all the information from the price action that I can. So by taking all the information from price action, I would go, okay, the utilities are doing well, consumer staples are holding up decently. I want to take note of that. I want to understand that that's the environment that could be happening here. And so if people keep rushing to these and getting more defensive, we could flip into more of a late cycle environment very easily. So that's something to take note of. But energy, obviously, we still want to be in our energy trade. We still want to be in our commodities. We still want to be in the commodity currencies. We still want to be short those bonds. Those trades are obviously doing very well. So it's all things that we're looking at the moment. So the S&P 500, now this one's just kind of fluctuated around since I posted this, but this is basically the head and shoulders formation. We got over it, which says that, hey, we could probably get back to new highs on the S&P 500. We need to keep taking note of that. Obviously, I don't buy the S&P 500. It's not something that I own. I'd rather be in the strongest sectors instead of owning it outright. So this looks pretty decent, but once again, I'd rather be in the strongest sectors right now. Next up is the KRE. KRE just kind of, it's trending up, not making a beautiful move like this, but we're just kind of trending up and sideways. So keep note of that. If you do have an OBV on which is on balance volume, on your chart, look for this to break out to the upside. If these break out to the upside, this would be another time to add to that position. Energy, obviously, it looks like kind of like a runaway train. And that's what we want to own. We want to own the runaway trains. We don't want to do anything where we're kind of jumping in and out of these things. We just kind of want to hang on, let this thing run let's see where we get to on this, but this has been a beautiful trade. First entry signal was this big gap up, if you remember, and I point this out, and I point this out all the time because, and it's not because I'm trying to say, look how sweet I am. I'm trying to say, check this thing out, because this is what usually happens. You see this big gap, you see all this volume flooding in, and people go, wow, I can't buy it now. I missed it. You know, like they for some reason thought they were going to buy it perfectly here and it was going to go up. But really, this is the buy signal. So boom, you buy here, you sail away. You know, this has been a great runaway train. Instead of the guessing, you know, like you're guessing in this area, you're guessing every day as we're coming down. But if you're buying here, there's no more guessing. You see this big gap up, you see the volume flood in, and that can be your signal. And boom, you're in another one runaway train. XME, obviously I've talked about the sector a bunch. I posted this the last time, and this was basically or on Twitter the other day, and this was something that I found interesting because I made this post a long time ago, and this was when this was breaking out here. And if you remember, nobody wanted to buy this at this point. We actually bought this here at this point, and nobody wanted to buy it. And then added here, once again, nobody wanted to touch it. And to me, when I see that, I go, okay, well, you know, you're never going to hit a perfect bottom, but you can find many ways to catch things. Now, also, the environment wasn't the right environment for some of these things at that point. But right, especially at this point, at these bottoms, at this spike bottom zone. But when you got to about here, we were seeing something different. And that was saying this was sustainable. This is a massive move here, and this has continued up higher. So, you know, once again, this is a very undervalued sector. This is going back to 08. You know, we haven't made a new high since then. So we have to continue to think outside the box in this environment and go, where do we want to be? Well, in these areas that have extreme value right now, that are making money from the inflation in commodities. Here's the real estate sector. This is the IYR that we're talking about. Still nice trend there. Tech, coal stocks. Once again, coal stocks, you know, there is no coal ETF anymore. There was, and I think they canceled it around here. I can't remember exactly the date, but it was literally near a major bottom. But yeah, coal has been a major mover. Once again, a nice runaway train. Industrials, not really going crazy on that sector just yet, but looks really interesting. Starting to look through some individual names, some individual places. This is the area, and look what's on top. Marine transportation, once again, something that Kashop has been covering like crazy. And here's some things inside marine transports. I also shout out Kashop, forgot I did that, but that's funny. And so kind of going through these things, and we're seeing like a very similar pattern, which is the same thing over again, which is we are moving up in the areas that we do like in the market at the moment. EWZ, there's this, and I said I would explain this a little bit more too, which is, so here's the scooter zone. So once again, you want to see this turn out. Scooter, if you want to read on stock charts how this is built. And once you figure out how this is built, you can kind of start to figure out, okay, where would if I'm looking at a sector, where would I be interested in buying it? Now, first off, I want to look at the chart. I always want to look at the chart because that's the main thing that I do. It's not everybody, but for me, that's the first thing I'm going to look at. And so here's the chart here. And so we start to see, okay, we're making this bottom pattern. This is kind of a flag style pattern, or a bottom, a square bottom, head and shoulders, whatever you want to call it. Really, none of that matters. It's just consolidation. So we're consolidating here. Then we break out to the upside. Now we're seeing we're getting up and over this 50 level on the scooter. That's telling me something. We also saw that relative strength has turned up really strong right here. And now we're at the beginning of a new trend. So getting to buy there, sailing up in a new trend. The currency is also doing well. It's also very important to understand a country's currency if you're going to buy a country ETF. We already went over some of that. XLK, once again, I don't hate the sector, but I'm not a fan at the moment. It's not something I'm a buyer of broadly. I'm sure there's some places you can find in there, but for me, that's nothing. Emerging markets. Very interested in emerging markets, not EEM because that's so tech heavy, but I'm definitely interested in some of these emerging markets. We are in EWZ, and which is Brazil and Mexico. And so if we take China out from the equation, look at this. This looks a lot better. So definitely continue to look at it. Shop and I were talking about Colombia today. So also remember, you know, I actually, my personal portfolio, which is going to be different than the funds, because in the funds, I can't trade as heavy or things that are, I can't trade things that are liquid. So things like Colombia and so on that are new signals, I'm not going to be trading in there, but there's a lot of things to look at right now in the country space. So definitely check it out. Mexico, another one. You know, we've been long Mexico for a while. Really nice breakout there. That looks really good. EZA, South Africa, another new addition. Sorry, I did not put that on the list. I should have remembered to do that, but that's been another new addition. See where that ends up, but that's been very solid. That's a good country ETF, enough liquidity for anybody to trade as well. And I wanted to point this about Europe, because I've been hearing how great Europe looks. I have no fucking idea what these people are talking about, but let's look at it, compare it to the US market. That's a downtrend. That is a straight fucking downtrend. That is disgusting. And then, you know, if we're up 156% in Europe over all these years, how far are we up in the S&P? Of 420%. Once again, yes, sometimes you'll see things in uptrends, but that doesn't mean we want to buy them. Sometimes you'll see things in uptrends and compare it to, you know, another market, another sector, another something. We would rather be in those sectors, because this is something that that looks better than it actually is. That's for damn sure. Now we're getting into the gold space. Which is gold miners. So gold miners looking really good. Once again, we had that bottom. We talked about that a while ago, where we started getting that kind of double bottom set up, breaking out to the upside. Still looks really good. Obviously, relative strength is pumping back in very quickly. It's going to be a very good trade in the gold mining space. We just need to keep paying attention to it. Gold, lots of volume flooding in. As you see, as we kind of hit here, we're just seeing the OBV kind of turn up. So volume is coming in, relative strength is back. Silver doesn't look quite as good, but once again, volume is certainly flooding into that space. Volatility is still low, and low volatility leads to high volatility. So at some point, this is going to make a major move. Don't know exactly when. Be ready for possible breakout zones. Be ready for something, but this could be a big move at some point. Silver to gold ratio, as we're seeing here, there's a white thing that says gold on here. That's because gold used to be behind this. I didn't use it because we have gold charts on it. But silver gold ratio, just flat. Not something you want to buy, not something you really want to do anything with it, or not something that's saying, you know, buy the crap out of the sector at the moment, but not something that's saying to sell the sector. Something that is saying to buy the sector is the GDX to gold ratio. That is a major move up, major, and that's saying something. So that's certainly saying, hey, you know, we have something shifting in this market right now. So let's see where that ends up. Palladium, and I wanted to talk about that a bit. So if you look here, there's the commercials. And long term, we never really get positive on the commercials. So as you can see here, we got positive on the commercials, you know, that big sell-off that happened in 2021. We ended up positive on the commercials. We're still holding positive on the commercials. Commercials are never net long in this market. So that's saying that this is going to bounce, and it did. That was a major bounce that just happened, you know, from you know, something like commodity that in a market that is that large to jump 100% in a very short amount of time is huge. So that was a great trade. Like I said, we got a new signal for that on Friday, so we are long palladium once again. And the thing with palladium too is, and this is the thing why I think there's a couple different parts of it. You want to look at things and go, okay, well, I would like to take this trade and I have these reasons. I have reasons like, yeah, sorry, Doug, so you might be able to hear that. I have reasons like, okay, we're looking at this and going, okay, here's this great trade in palladium. We have this thing happening in Russia. We have Ukraine happening. We have all this happening. And so we go, okay, well, I'm interested in palladium. And then we want to look at the charts and go, where's an entry point? Okay, I'm going to take that entry. And then we want to, obviously manage the trade, have a stop loss, have a point where we're going to get out of a sell signal and then sell that sell signal. 25 copper to gold ratio. So if we're looking at it here, we have the copper to gold ratio right here. And we're kind of moving up and yields as well. So as we're seeing the copper to gold ratio and yields moving up, we're seeing this all kind of coming together. Sorry about that. Dog started going crazy. Somebody came over. But now looking at it, we're looking at the copper to gold ratio. And so we have the copper to gold ratio right here. And this usually tells us where yields are heading. Copper meaning global growth, gold meaning global growth slowing. And so these two against each other really give us a good way of identifying where yields are headed. So yields here headed in a downtrend with copper to gold ratio, yields heading up, so is the copper to gold ratio. And usually copper gold ratio kind of leads it. As you see, we get the higher low here and yields bounce big. So if you're in bonds, obviously shorting bonds the yields are inverse. So shorting bonds was the way to play this trade. And then once again, now we're flat and seeing that we're flat, then it kind of came back. But once again, we didn't move down. So this was also saying that yields could bounce once again, and they have been very nicely. So I think copper's got a lot more up to go. We'll just have to see how that goes. And talked about this before, where we're kind of carving out these zones. And these zones are carved out in such a way that we can kind of get to a major turning point in these markets, meaning, okay, here was the range that we were in for a very long period of time in copper, and here's a range we were in for a very long period of time in copper. I think we're going to see this range kind of taking off here, and we don't really get back down to this 3 level, 3.5 for a very long period of time. Oil, that's been bouncing back and forth for the last couple of weeks, but if we're looking at a long-term trend, this still looks like it has more upside, which will be very painful. It's getting to the point where it's starting to get painful to the market to have oil up here. Right now it's came all the way back to 95. We'll see where that heads up. Heating oil is still hanging out on the long side, so we'll have to see what's going on with that. Natural gas, this is NG, the continuous contract, but if you look at, we're in August contract, it's at new highs. It's moving much higher, faster than I could have ever believed. We're also in European natural gas futures. This has been a major move, majorly nice trade. So we'll see where that ends up. Sugar, so sugar coming in here. Sugar looks really good. It made that buy signal the other week. Definitely took that. We'll see where this ends up, but sugar is definitely something you want to keep an eye on here. Wheat, still long wheat, even with all this going on, even with the climactic top. We're still holding our primary trends here, so we're going to stick with that. Aussie dollar to yen pair, that's commodities. Basically, inflation against deflation is a way of looking at that intermarket signal. And this kind of looks pretty good here. So I think commodities are still on the rise. Some intermarket signals. Now, I stopped posting charts because I literally could have posted charts on this month forever. Janky TLT, it's still saying risk on here, so we'll see where this ends up, but obviously this is still in a nice uptrend. Gold S&P hitting long-term support. So as we're hitting this kind of long-term support, we're seeing that maybe gold will start to outperform the S&P again here. We want to keep paying attention to it because that is possible and also might not happen. So we just want to keep an eye on it, listen to the signals, listen to the market and see what happens. But right now, gold is looking really good. This looks worse than it is because this is a long-term quarterly chart. So we're kind of getting that long-term picture, and that's what we want to see. We want to see, where does this level usually get to? Are we going to hold this level? And I think we could hold that level and bounce higher. And once again, it'd be somewhere where you want to be in gold instead of into the S&P 500 at this point. TLT to SPY, same thing. It's a long-term chart, weekly chart. This is just heading straight down against the S&P 500, even though the S&P has been down. As a bad look for that one. CRB to USB, energy is still the major outperformer, obviously. And that also tells us we still want to be short bonds. We do not want to be long bonds here by any means. Long-term view of yields, still seeing, obviously, the red line, that's where we are in that. The green line, as well as the orange line, all these are where money is being made. I am personally in the euro dollar short as well. Yields, once again, are inverse, so these are all still doing very well. I think the euro dollar futures have a lot more to go. Bitcoin consolidating. ETH to Bitcoin, still saying that Ethereum's the way to be. So we're kind of still seeing that we're risk on in the space. Not sure if I'm really futures wise and leverage wise, I'm not really a buyer of crypto at the moment. I think I want to stay on the sidelines for that one. All right, everybody. Hope everybody had a good week. We'll have a good week of trading here. There's definitely a lot of stuff going on in the markets. I just want to, say that some things to pay attention to here are what we went over here. There's lots of trades and lots of great stuff that we would like to look at and kind of just pay attention to right now. Just kind of watch how things are playing out. For most of the positions, it's not anything that I want to buy and go big on the long side and looking for things to just leverage up in. I think the market is at a very precarious place. It could go up, it could go down, it could go side, it could do a bunch of things right now, but I just kind of want to sit in the positions I have, not really add much more, and just kind of wait and watch, seeing what's going to happen. Sometimes the hardest thing to do is just sit on your hands, and I think right now it's time to just kind of sit on our hands.